The conversation around silver and gold investing has taken a very interesting turn lately, especially as prices continue moving in dramatic ways and emotions across the precious metals community remain mixed. On one side, there are investors celebrating massive gains after years of patience, while on the other side, there are newer buyers feeling frustrated because they entered the market near the highs and expected prices to move straight upward forever. What stands out most, though, is that inside many coin shops across America, the atmosphere is far more grounded than what you often see online. Instead of panic, fear, or hype, there is a growing focus on discipline, collecting, and long-term thinking. The discussion began with a surprisingly honest statement that immediately caught attention. One of the hosts joked that he was there to provide one reason not to buy silver. In a world where so many influencers constantly scream about silver exploding to the moon or gold replacing the financial system overnight, hearing someone openly discuss reasons not to buy was refreshing. It set the tone for a much more realistic conversation about what investing in precious metals actually looks like in the real world, especially for ordinary people trying to protect savings, enjoy a hobby, or build wealth slowly over time. The timing of the conversation also reflected growing interest in physical metals again. Silver prices were pushing higher, gold had jumped sharply, and yet many investors remained dissatisfied because silver was still below some of the extreme highs reached during the most emotional buying periods. That emotional divide says a lot about human psychology in markets. When silver first surged into historic territory, excitement exploded everywhere. Social media became flooded with predictions of $200 silver, financial collapse, and overnight fortunes. Many first-time buyers rushed in during the frenzy. But markets rarely move in straight lines forever, and once prices pulled back, disappointment quickly replaced excitement. Yet inside the coin shop featured in the discussion, demand never truly disappeared. According to the owners, silver continued moving steadily regardless of price swings. Inventory remained thin, popular products sold quickly, and customers kept coming through the doors. That contrast between online sentiment and real-world activity is extremely important. Online fear and greed dominate the conversation hour by hour, but in physical coin shops, many buyers operate on a plan. They continue accumulating during both highs and lows because they view precious metals as a long-term form of savings rather than a short-term gamble. One of the most interesting moments came when the conversation shifted away from prices entirely and toward the emotional side of collecting coins. The hosts described how an elderly customer visited the shop looking for specific Roosevelt dimes to complete coin folders he had been working on for years. Instead of rushing him through the process, the staff spent nearly an hour carefully searching through trays of coins to help locate the missing pieces. By the end of the visit, nearly every spot in the collection had been filled except one rare date. What made that story powerful was not the value of the coins involved. Roosevelt dimes are not necessarily rare or expensive compared to many collectible coins. The important part was the joy the collector experienced during the process. The excitement of crossing coins off a checklist, filling empty spaces in a folder, and completing a decades-long project reminded everyone involved that numismatics is about far more than simply calculating profits. That perspective is often missing in today's investment culture. Many people enter markets expecting instant gains, constant excitement, and guaranteed returns. But hobbies like coin collecting operate differently. There is patience involved. There is history involved. There is curiosity involved. Every coin carries a story from a particular era, government, design, or economic moment. For collectors, finding a missing piece can create more satisfaction than watching a chart move upward for a few days. The hosts emphasize that collectors and stackers often overlap, but they are not always the same type of person. Some people begin with bullion investing and later discover collectible coins. Others start with coin collecting as children and eventually transition into buying silver and gold for wealth preservation. Either path can lead to a deeper appreciation of precious metals, but the key message remained clear. If your only motivation is short-term profit, you may struggle emotionally during volatile markets. That idea became especially important when the discussion turned back toward silver prices. Despite silver trading dramatically above historical averages, some investors remained upset because they bought near the peak. One host pointed out that before recent years, silver had never even reached certain price levels in modern history, yet now it was holding far above them. In other words, perspective matters. Someone who entered the market years ago likely sees enormous gains, while someone who entered during the excitement may only see temporary losses. This is where the concept of dollar-cost averaging entered the conversation. Rather than obsessing over finding the perfect entry point, experienced stackers often buy gradually over time. If prices rise, they already own metals. If prices fall, they can reduce their average cost basis by buying more at lower levels. This disciplined approach removes much of the emotional stress that comes from trying to perfectly predict market timing. The hosts also noted that many customers entering the shop were continuing to buy despite price volatility. Mercury dimes, silver eagles, gold coins, and other products were moving quickly enough that display cases appeared unusually empty. Gold demand remained particularly strong after recent price corrections, while silver continued attracting steady interest from long-term stackers. The important detail here is that buying activity did not completely vanish when prices stopped rising rapidly. Serious buyers often view corrections as opportunities rather than disasters. Another fascinating element of the conversation involved the difference between hype-driven buyers and disciplined investors. The host joked about customers who bought silver at extremely elevated prices during the peak excitement and may never return. But they contrasted those individuals with loyal long-term customers who simply worked the plan regardless of short-term fluctuations. Those steady buyers appear to form the backbone of the physical precious metals market. That phrase, "work the plan," became one of the central themes throughout the entire discussion. Rather than chasing headlines or emotional predictions, experienced investors typically establish rules for themselves. They decide how much to allocate toward precious metals, how frequently to buy, and how long they intend to hold. Once the plan is established, they stick to it during both euphoric rallies and painful corrections. This mindset is critical because precious metals are inherently volatile. Silver especially can experience enormous swings in relatively short periods. Investors who enter the market expecting guaranteed monthly profits are often shocked by how emotionally difficult those fluctuations can become. But investors who view silver and gold as long-term stores of value tend to react far more calmly because they understand the bigger picture. The discussion also highlighted something often overlooked in financial media: the human side of local coin shops. The atmosphere described was not merely transactional. Customers came in to talk, learn, browse collectibles, and even enjoy homemade cookies baked by one of the owner's family members. That small detail may sound insignificant, but it reveals why physical precious metals communities remain surprisingly resilient despite changes in technology and online trading platforms. For many people, visiting a coin shop is not just about purchasing metal. It is about participating in a culture built around history, collecting, craftsmanship, and financial independence. Some customers become fascinated by old Mexican coins tied to family heritage. Others search for rare seated Liberty coins, type coins, or historical currency. These personal connections create emotional value that goes far beyond spot prices. The hosts also discussed custom-built watches created by a young local craftsman whose work they plan to support in the shop. Again, this reinforced the broader theme that many people involved in precious metals appreciate craftsmanship, detail, and tangible objects. In a world increasingly dominated by digital assets and virtual experiences, physical items with history and artistry continue attracting strong interest. As the conversation progressed, the topic shifted toward one of the most important financial lessons shared during the entire discussion. Precious metals are generally not appropriate for short-term goals. One host described a young man who wanted to place money intended for a house down payment into silver for just 1 year because he did not trust banks. Instead of encouraging the purchase, the shop owners advised against it. That advice may surprise some viewers because businesses typically want sales. But the reasoning was solid and practical. If someone needs money for a specific purpose in the near future, especially within a year or two, volatile assets create unnecessary risk. Silver and gold prices can swing dramatically during short periods. Even if long-term fundamentals remain strong, temporary declines could reduce the amount available when the money is actually needed. The hosts explained that short-term savings goals should prioritize stability over speculation. Whether someone is saving for a house, vehicle, medical expense, or other important purchase, the priority should be ensuring the funds remain available when required. Precious metals may serve well as long-term wealth protection, but they are not guaranteed to rise on any particular schedule. This point directly challenged some of the extreme narratives often pushed online. Many social media personalities portray silver and gold as guaranteed paths to quick wealth, but experienced dealers who interact with customers daily understand reality is far more nuanced. Markets move unpredictably. Timing matters, risk management matters, and financial decisions should match personal goals and time horizons. The conversation repeatedly emphasized caution against emotional buying during price spikes. When metals surge rapidly, fear of missing out can overwhelm rational thinking. People begin imagining endless upside and start investing more money than they originally intended. Experienced dealers try to slow that emotional momentum by reminding buyers to stay disciplined and stick to budgets. One host even mentioned that budgeting remains important regardless of wealth level. Even individuals with significant resources benefit from setting limits and maintaining diversification rather than concentrating everything into one asset. That advice reflects a mature investment philosophy focused on sustainability rather than excitement. Another major takeaway involved the distinction between speculation and insurance. Many long-term stackers do not view precious metals as lottery tickets. Instead, they see them as a form of financial insurance against inflation, currency instability, or economic uncertainty. Insurance is not something people typically expect to generate immediate profits every month. Its value comes from protection and peace of mind over long periods. This mentality changes how investors react during market downturns. Someone treating silver like a short-term trade may panic during corrections. But someone viewing silver as long-term insurance is more likely to remain patient because the original purpose of ownership has not changed. The hosts also encouraged people to actually enjoy the items they buy. Instead of obsessively checking prices every day, they suggested taking out a silver eagle or collectible coin and appreciating the craftsmanship and beauty. That may sound simple, but psychologically it can make a huge difference. Investors who appreciate the physical object itself often experience less stress than those focused entirely on market fluctuations. As the interview wrapped up, the overall message became increasingly clear. Precious metals can absolutely play an important role in long-term financial planning, but they require patience, discipline, and realistic expectations. Silver and gold are not magical assets that guarantee instant wealth. They are volatile, emotional markets influenced by global economics, investor psychology, industrial demand, monetary policy, and countless unpredictable events. At the same time, the conversation showed why so many people remain passionate about physical metals despite the volatility. There is something uniquely satisfying about holding tangible wealth, collecting historical coins, completing folders, studying numismatics, or building a stack slowly over time. Unlike purely digital investments, physical metals create a direct personal connection that many investors find comforting. The broader precious metals market today appears caught between two competing forces. On one side, economic uncertainty, inflation concerns, and distrust in traditional financial systems continue driving interest toward gold and silver. On the other side, speculative excess and unrealistic expectations have created frustration among newer investors who expected immediate profits. What experienced dealers seem to understand better than most is that surviving these markets requires emotional balance. Extreme optimism and extreme pessimism are equally dangerous. Investors who chase hype near the top often suffer emotionally during corrections, while those who panic during downturns may miss long-term opportunities entirely. That is why the repeated phrase, "work the plan," carries so much weight. Successful long-term investors rarely operate based on daily emotions. They build strategies, maintain discipline, diversify appropriately, and allow time to work in their favor. They understand that wealth preservation is usually a marathon rather than a sprint. Perhaps the most refreshing part of the entire conversation was its honesty. There was no screaming about imminent collapse, no promises of overnight riches, no pressure tactics encouraging viewers to empty bank accounts into silver immediately. Instead, viewers received grounded advice from people who interact daily with real customers navigating real financial decisions. In today's media environment, that kind of realism stands out. Financial content often thrives on fear, urgency, and sensationalism because those emotions attract clicks and views. But calm, practical guidance tends to be far more valuable over the long run. Advising someone not to buy silver for short-term goals may not generate hype, but it could save them from making a costly mistake. Ultimately, the conversation painted a picture of the precious metals world that is far more balanced and human than many outsiders realize. Yes, prices matter. Yes, profits matter. But beneath all the charts and headlines exists an entire culture built around collecting, history, craftsmanship, discipline, and long-term thinking. Whether someone enters the market through bullion investing, coin collecting, or simple curiosity, the journey often becomes about much more than money alone. For some, it becomes a hobby that connects generations. For others, it becomes a way to slowly build financial security outside traditional systems. And for many longtime collectors, the greatest reward is not necessarily financial gain, but the satisfaction of finding that one missing coin that finally completes the set after years of searching.